Assalamu alaikum everyone. Thank you for joining. Today we are presenting TPL Corp's analyst briefing results for July to June 2025. We are starting with TPL Insurance. We will be discussing the company business profiles, business and the financial results. So starting with TPL Insurance, I would request Amin sir to please
जी जी
start
बिल्कुल
from the.
बिल्कुल Bismillahirrahmanirrahim. So TPL Insurance key highlights for the period. Essentially, we are still a growth company and powering towards greater growth. So we have continued increasing the gross written premium, which is a 14% growth year on year at 5.2 billion. And then CK proportionally net earned premium increased by 20%, which is gross written premium minus the reinsurance premiums that we pay away to reinsurance companies. Motor segment continues to be the largest segment of the business, which reported a gross written premium of 3.4 billion, increasing 15% versus last year. Property segment also showed growth, or decrease over last year by 104 million, reflective of the IPP contracts that were terminated by government of Pakistan, and therefore those power plants ceased to be required insurance coverages. So we lost that business, but we are making that up from other sectors. On the miscellaneous segment, which comprises of travel, agri, and a lot of other smaller business segments, there is growth of a significant nature given the small base. So gross written premium was 372 million, which grew by 168 million, reflective of the strategy to diversify into new business areas which are giving us greater growth and therefore not be dependent on only one particular segment of the business. Claim ratio improved slightly by 1%, and this is one of the largest cost bases of the company. So claim efficiencies is something that we watch very, very carefully, and we are very keen to, and it has something that we, from efficiency perspective, is a key indicator of how well we are performing. Commission ratio is again part of the cost of origination of business, which is in line with last year at 9%. Investment and other income declined by 33%, reflective of the decrease in the State Bank monitored interest rates. So, I mean, as you've seen, we came from a high of 22% to 10.5% nowadays. So that's obviously getting repriced into the investment book, and therefore the investment income is declining. Profit before tax reported at 90 million for the financial year 2025. After tax reported at 33 million, including window takaful operations, which is roughly 50% of the business. Essentially, still that caused a loss of about 25 million for the financial year 2025. Next slide. Next, Karne. This is a numerical representation of what I just talked about. So that's showing the actual versus the budget, and essentially showing the line items what I just went through. This is basically also showing the fact that a certain element of the Kaful business is not part of our own, is not shown in the shown in the account separately. आगे चलें. From a strategy perspective, TPL Insurance is a growth company. We have a dominance in the retail segment, and we are continuing to grow. And that in two ways, we intend to grow, and we focus on growth from within the existing lines of business and diversifying into new lines of business. So what I talked about, it was the growth in the miscellaneous segment, which is agriculture, pet. We are issuing motor vehicle guarantees, which is for deferred payment plans issued by OEMs. And we've launched a new premium customer insurance segment called Titania. So this is generating new cash and new business, which was not there, and this is diversifying away. We have made significant investments, being an IT-centric company in SureTech credentials, in CRM systems, process automation, and employee development on AI, which is generating results in terms of improved efficiencies and lower cost of resourcing from an HR perspective. We live in a dynamic market. We are not in control of the macros, which we are all subject to. But for the past few months, we have seen relative stability for the PKR against the dollar, and the inflation has also come down. So that's a positive. But we've seen highs of 30-40% inflation and rupee depreciation of 30%. So these are system shocks which no business can anticipate, and no business can really plan for. But we've survived them. We put this behind us, and we are continuing to grow despite all these challenges we've seen. And currently, we are very positive about the future. There is, as is known in the market, public information that TPL Insurance is currently under process of acquisition by Jazz. So that's progressing well. We are on track. Approvals for some which are in advanced stages. So those have almost been approved, and we will hopefully look to close the transaction in end of Q1 this year or maybe early Q2 next year. I think that's about it. Then I can wait for questions later. Questions at the end भी करेंगे या भी करने?
At the end.
अच्छा ठीक. Okay, all right.
For TPL Life, I would request Mr. Sadhu sir to please present TPL Life.
Very happy.
Sadhu sir,
Apologies, muted. Can you hear me now?
Yes, you're audible.
Okay. So, Bismillahirrahmanirrahim. Thank you, Junaid. So, this is what our P&L looks like. We had gross premium was down by 26%, falling short by about 127 million. The decline was basically marked under health portfolio by about 28%, and on the life side, again 24%. So, it was basically almost the same kind of decline on both sides. As far as verticals were concerned, our corporate business declined by 13 million. This is basically a strategy whereby the company is pivoting from corporate-centric insurer to more of a digital and insurtech player in the market, and especially in the micro segment. Our FIG business declined by 76 million, and the main reason for this decline and the digital decline of 38 million was a few embedded partnerships, just like Amin mentioned, because of the macros being sort of quite challenging for everyone in every business. So these were the embedded schemes which the banks were providing to their priority banking customers, or say Amal account, Festal Bank on the women-centric side. And that is something that ultimately they pushed their budget off. And this was the reason for the main decline as far as the premium is concerned. In terms of the premium ceded to the insurers, I won't go line by line, but cascading down, since we are moving more on the unit link side, which is Takaful product with Dubai Islamic Bank, there's more which is being ceded to the insurer. And then the movement in insurance liabilities, this is basically the UPR, the unearned premium reserve. So we had an accrual of about reversal of accrual of about 60 million, which was done in FY2025. And so net premium revenue was recorded at 36% less as compared to last year. Investment income, again, slightly 4% decline. Again, this is basically due to the change in the CIBOR on the Sukuks and the PIBs that we have. On the claim side, it was sort of higher by 1%. As a claim ratio on net premium, it was higher by about 13-14%. So moving into the retail side, the claims is going to go up, the acquisition expense is going to go up, sort of commissions. However, there'll be a better margin for us in terms of the product viability, because the pricing is in your control, and these are not corporates that are actually sort of, a very competitive market where every other IP is actually working. So admin expenses were down by 21%, mainly because of one-off record expense. We had a bad debt of 41 million last year. And of course, the impact was on the saving measures and the payroll. So we've had a hiring freeze, and we're trying to best sort of, mitigate with the resources that we have, and not hire sort of people on the higher salary bracket, rather than giving a chance to the people at the middle and the lower management to come up the ladder and face the challenge and perform to the best of their abilities. So the P&L after tax was 312, which was 14% higher than last year, with an LPS of 1.39 as compared to 1.22 last year. So expense ratio on GP, which is the last item, is 106% as compared to 99. But going forward, when we'll be presenting the FY26 numbers, we'll be seeing a lot of difference in terms of premium revenue, as well as other verticals that we are working on. Next slide, please. So what retail initiatives have we taken off? So on the active side, we are strategically aligned with Abhi Microfinance Bank. We've just started working with them in FY2026. It's a 30 million plus partnership that we're looking at. Mobilink Microfinance Bank, both life and health. Again, a strategic alignment with them. This account has been with us for the last 4 or 5 years, but has been seeding about 50 million. However, in this fiscal year, we're expecting a 200 million plus book on this end. So that is probably one of the biggest verticals that we're going to have on the micro segment side. On the unit link side, the Islamic Bank again has chosen us and IGI as the only two partners that they're going to work with. Seeing a target of 400 million split 50-50, we're looking at a 200 million book coming in from DIB in this fiscal year. Next, please. So on the Federal Bank side, we did lose the priority account and the embedded schemes. However, we still have embedded health cover for the account holders. This is a parental and dental product which yields about 30 plus million. We are working with them on the scheme. We've just sent them the pricing, and we are hoping to close this mid of Feb. On UBL side, we've had a meeting with their group executive or group head, consumer finance. The product suite has been shared with the management, and we're just waiting for them to get back to us in terms of what they want and a bit of tweaking, and we should be able to launch this mid of March. On HBL, again, the same, just like UBL, we've had our meeting with their top management in terms of the consumer side, and we're just waiting for them to get back to us as to which product would they like to roll out the relationship with. Again, the target is Q3 FY2026. MCB Islamic, again, life and health, a couple of proposals have been shared with them. This is for the CASA account holders. This is a 10 million minimum plus partnership. Date is yet to be decided because we're still in sort of negotiation phase with them. So this could be, sort of north of 10 million, can go up to at least 20, 25 million, 30 million. So just to wrap things up and put things in perspective, on a strategic end, what we've done is that we've pivoted from embedded schemes to actual boots on the ground, which is giving us the DIB and the MMBL and the micro segment sort of announcement that we're working on. And that is the vertical that we're trying to increase. Our Genly product, which is the high-end international health cover, is again has about 100% renewal rate. And every year we are adding about 20-30% customers on that end as well. So these three verticals, the DIB, micro segment, and the Genly high net worth individual international health, these three verticals will continue to be the main focus of our strategy and execution. And we are hoping to get a pretty good number set in FY2026. Thank you so much.
Thank you, Salsa. For Tracker, I would request Mr. Swan to please present TPL Tracker results.
Thank you, Junaid sir. Bismillahirrahmanirrahim. Assalamu alaikum. So this is a summary of the consolidated financial performance in terms of revenue for the financial year ended 2024-25. As you can see that the overall revenue has declined by 20%. However, sorry. Okay. So as you can see that there is a growth in the IIoT segment. And of course, the ST and EITV segment remains on the. Well, I would request everyone if you to kindly mute your mic unless you are asking something. Thank you. So, this is the summary of the revenue for the financial year 24-25. As you can see, that the overall revenue has declined by 20% on account of the loss of ST, which was one of our major revenue driver in the last financial year. However, despite of this loss, we have shown some prominent increase in the industrial Internet of Things by 23% as compared to budget. And as far as the telemetrics is concerned, there is a marginal decline of 9%. However, as compared to last year, there is an increase by 5%. So the other revenue segments like auto hardware and navigation, ST and EITV, they are still in the infancy stage. And we are working on bringing in some promising numbers, which will definitely contribute in the upcoming financial year. Next slide, please. This is the consolidated profit and loss account. As I said earlier in the previous slide, the turnover is reduced mainly due to the STE business. Other than that, the operating profit is also reduced by 64% on account of the same revenue driver impact. The earning before taxation remains at 78 million as compared to the last year of 56 million negative. So there is a growth of almost 239%. The profit before taxation stands at 23.66 million compared with the last year loss of 112 million. Earning after taxation is 23.935 as compared to the budgeted loss we have anticipated for 22.229 million, and the last year numbers were 104 million loss. Next slide. So these are the key business highlight for telematics and IoT. We have closed some, promising deals in terms of telematics, FIG around 70 million. Sutra Punjab, we are working very closely with the government of Punjab on the Sutra Punjab incentive. As you all know, that Sutra Punjab has been declared as one of the most organized program across the globe. Shell Pakistan, we are working. This is one of the oldest client we have. So the closed deal size was 22.2 million. The Telenor Pakistan, we have closed a deal of 13.3 million. As far as the sales pipeline is concerned, we are very much actively working with Nishad Textile, Care Consortium, PepsiCo. And as far as the container tracking and trip management solution is concerned, we are working with, on proposals, we are working with Agro Fertilizer. The genset monitoring, we are working with Recotec Pakistan, Agro Polymer, Nishad Textile, and business expansion for genset solution for more than 100 units with Telenor Pakistan Limited. Next slide. So this is the business highlight for our associate undertaking Tracker Middle East. We have closed some deals with Emirate Global Aluminium. The quantum is 273,000 AED. Dubai Petroleum Establishment 163,000. Sales pipeline update. We are anticipating a closure of Emirates Transport, Sarjat Africa, Erada, Move Lemnuzi, and Hills and Fort.
Thank you, Irfan. I would also request you to please.
Yeah, definitely. So TPL Map is the 100% wholly owned subsidiary of TPL Tracker. We got some big names on board as our clients like Faisal Bank, UBL, GCS, Khadi Corporation, Habib Bank Limited. Sales pipeline around 65% related to Yango, Sapphire, and Broadway. And we are using APIs are like Nearby, Geocoding, and Vector Maps. So these are this is the sales pipeline. We are working with Amir Al Khatibi Al Alami, Tracks, Systems, and InDrive.
Thank you, Irfan.
Thank you.
Some more information about the portfolio companies about Avi Microfinance Bank Private Limited, which TKP holds around 25%. Actually, the acquisition was done on during December 2024. This is the financial performance for next 6 months. Till the period ending from starting from Jan 2025 till June 2026. From the date of acquisition, the gross loan portfolio has increased from 20 billion to month-on-month basis to 26 billion in June 2025. The deposits have also increased from 35 billion to 44 billion. Total revenue on month-on-month basis remained hovering around 1 billion, starting from 883 million to 1.1 billion. More importantly, the capital adequacy ratio when the bank was acquired by TPL and Avi Private Limited was around minus 99.7%, which after the part of the deal, both injected equity and the capital adequacy ratio has improved to minus 37%. For TPL Properties, I would request Jamal Sir and Rizwan Sir to please come here.
Properties or RMC?
RMC को कवरिंग सुनता.
Next. Thank you, Junaid. I think I will talk a little bit about the REIT fund. and then also talk about the underlying projects of the REIT fund. We are one of the largest REIT funds in the country. We have 3 developmental assets with a total asset value of about 36 billion rupees. When we did our financial close, the NAV per unit was 10 rupees. As of September 2025, the NAV per unit is 18.28, representing almost an 80% return on the original investment. A unique feature of this REIT fund is that 8 of the largest financial institutions in the country own 60% of the REIT fund. So Habib Bank, Bank of Punjab, National Bank, Bank Al Habib, Bank Al Falah, Askari Bank, Habib Metro, and Sunari collectively own 60% of the REIT fund. And the group owns 38%, roughly 2% is public. Some key milestones over the last 2 years since we went public in 2024 are as follows. In June 2024, we started the infrastructure work at the Mangrove, which is our largest development, and I'll talk a little bit more about that. In December 2024, we launched our sales office at the Mangrove, and in February 2025, we launched our first tower, Lagoon Views 1. We held a groundbreaking ceremony of Lagoon Views 1 in July, and in September, we launched the Mangrove Biodiversity Park. This is a very unique location. I encourage all of you to visit the Mangrove Biodiversity Park. It is, of course, a gift to the city of Karachi. We are, of course, a sponsor of it in collaboration with the Sindh government, but again, a very, very unique place to visit. In December, we started the piling work at Lagoon Views 1, and that continues during the course of January and into February. So we're really excited about that. Next. There are 3 underlying projects in the REIT fund, and this slide is supposed to give you a perspective on the overall size. By far, the Mangrove is the largest asset in the REIT fund. Whether you look at it from a book value perspective or a built-up area perspective or size of land parcel, roughly 85 to 90% of the value resides in the Mangrove. And I'll talk a little bit more about that later. Technology Park, TTZ, the unit holders of the REIT fund took a decision in 2024 to sell this plot and relocate the Technology Park to the Mangrove. So this plot is under sale, and the proceeds from this will be diverted to the Mangrove project, as also approved by the unit holders and the anchor investors of the REIT fund. One Hoshang, which represents about 5-6% of the overall value, we have taken a decision to sell this asset because one, the location represents some challenges because there's a lot of mid-tier development in and around that area. So it didn't make sense to have a very high-end, ultra-luxury residential property in that location. And what decision that was taken was that the proceeds from this particular asset sale will be paid back in dividend to the unit holders. So this is subject to approval from our anchor investors. That approval is given. We'll proceed with this asset sale. Mangrove, again, a little bit more about this now. This again is 90% of the value of the REIT fund. Over the next 10 to 12 years, as is currently envisaged, 20 towers will be put up over that period. 12 of those will be developed by our development advisor. Maybe up to 8 may be developed in collaboration with a third-party developer, depending on how our unit holders sort of approve this. And there are distribution of dividends to our unit holders for each of the years going forward, the first of which will be through the One Hoshang asset sale in 2026. Next. This is just the same thing pictorially. It shows the timeline between now and the life cycle of the project. The blue tab in 2026 represents a dividend payout from the sale of One Hoshang, subject to approval from anchor investors. And then the red banners are distribution of dividends to our unit holders through either a sale of a plot and or construction and completion of a tower over the course of the project itself. Next. So I'll dive a little bit deeper into the mangrove, and maybe I will request the CEO of our developments business to Rizwan to actually talk about some of these slides.
Thanks, Jamal. So basically, mangrove is a project that you might be familiar already, but just to summarize for you, this is a 40 acres piece of land where we have master planned the whole community, including a series of residential towers, a hospitality block, and offices, and a lot of green spaces, and a true mixed-use development community project in this part of the world that truly meets international standards in terms of its design and its planning. This slide is mentions the land value has appreciated a lot over a couple of years, thanks to the TPL's engagement in that part of the city, which really helped improve the connections, connectivity, and generally the appetite of the people in that part of the city to see that area as a high-end or mid to high-end residential destination area. Some renders from the development itself. As I mentioned, we have retail spaces. Majority of the buildings are residential, and that being supplemented by a lot of green spaces. So as we speak, 46% is, to be precise, the green space component within the development, which is much beyond what the normal standards ask for. To the right, you see a hospitality tower, IT tower, which has been brought to this location from its earlier location at Ayumabad. Next slide, please. Some more details on Technology Park. Going to be one of the high-tech spaces in the city to have spaces for technology, IT office spaces, and a component is also dedicated at some of the top few floors for hospitality brand, so that it supplements the whole development in total. Next slide. Some other assets we are doing there. We have achieved over past year, we've achieved the completion of the detailed design of multiple buildings on that project. We established a sales and site office, which was instrumental in captivating public and customers on site, and also facilitated the development there, being the point of contact for every kind of activity on that piece of land. We have divided this project into multiple phases because a huge development. The first tower, if you go to the next slide, the first tower, as we speak, is work in progress since June 2025, where we did a formal inauguration in July. And since then, we are working on site, primarily focusing on foundation works, especially piling and ground improvement and other high-tech geotechnical works that are required to have a resilient and safe building on that location. Next slide, please. So that was the main building. In addition to that, one of the purposes for us for being there is to bring more attraction to the location itself. That we are doing through a lot of allied facilities, including a sports facility which we recently commissioned, and we have started its soft use. There are 4 paddle courts and a futsal, and this space will be going to be a next destination sports play area for Karachiites, because the weather is ambient. The ambient weather is very good, and this space is ideal for outdoor sports activities in this part of the city. So we are very excited about that. The second thing is model apartments. Again, this is very critical for us, that we really show the kind of apartments we are going to construct for the residents. So this is very critical for our sales and marketing perspective to boost sales. We really needed to have this model apartment in place, which is work in progress as we speak. And by end of April, first week of May, we should be having a model apartment for our customers to see physically how it's going to look like. So this is work in progress too. If you go to the next slide, please. More stuff happening in the form of TPL offices. Some of you know we have offices across Karachi, including our head office here at Sky Towers. So part of our engagement to this particular location, we are moving our offices and consolidating them here, primarily to give a message that we are very much there and we see a future to that part of the city in terms of access, connectivity, which we will talk in a while on the next slide. So we are enhancing the connectivity to the site in the form of working with Cantonment Board Karangi to push them to improve the services, as well as a portion of nearby roads are being developed by ourselves. And if you have not seen this location or site in the last 6 months, I strongly recommend you visit us to see the kind of ambience and environment we have created in the last couple of months. Next slide. And this is something I was just mentioning about, that the Cantonment Board Karangi, which you see in the map in form of a dotted line, is transforming through a series of infrastructure projects that the Sindh government has implemented very recently and also going to implement in 2026. So one of the key highlights is the Karangi Causeway Bridge that you can see in slide there. Which was very recently, in fact, last week it was inaugurated by the CM himself. And as we speak, this bridge is open for public now. In addition to that, the government of Sindh is constructing a roundabout that you can see in the form of a circle in the map. That's going to connect Malir Expressway, Creek Road, the new Causeway Bridge, and the KPT interchange. So there's going to be a really nice interchange, maneuvering traffic from all directions without signals. And so these two components are pretty much done. The last component is that blue route that we have shown there. That's going to bypass the Indus Hospital bridge, which should bring the traffic from DHA or rest of the city within few minutes to our site. So these developments are really transforming the area, not for us, but for everyone who is space there. Next slide. And of course, how can we miss Mangrove Diversity Park? And I'm not sure you have seen this, but it's already talk of the town. And we have opened this almost 4 months back by the mayor himself. And we are receiving university students, environmentalists, architects, and general public who are visiting this park. The fund initially gave capital for its construction, but Alhamdulillah, this park is self-sustained now. These operations, maintenance, and management is being self-sustained. And in fact, we plan to expand this park further. There was a series of platforms that goes into the mangroves and waters. So this is a very exciting project for us and for all Karachiites. I think that's it from my side, Jamal.
Yeah, I think just in terms of go back. I think this is a really good piece of news. We have recently partnered up with one of the largest builders and developers in Karachi to help develop the mangrove. Our partner brings extensive experience of developing vertical blocks in Karachi. What this will allow us to do is to accelerate the construction of the towers over the duration of the project. When I mentioned earlier, the 20 towers would be developed over a 10 to 12 year period, but we are very, very hopeful given this new partnership, which started this week. We will be able to shorten that delivery timeline to 7 to 9 years, maybe 6 to 8 years. And to that end, we anticipate launching 3 towers in 2026. This will again allow us to accelerate dividend payouts to investors and, of course, improve investor returns. So this is a very new development this week. We're extremely excited about it. And you will hear more about this over the course of the coming weeks.
Thank you so much, Master. With regards to the consolidated financial statements of TPL Corp, First, we'll discuss about the standalone financial performance of TPL Corp. No dividend was received during the year. Administrative expenses has reduced on account of the decrease in salaries primarily. Finance cost has significantly reduced just because of the debt repayments we have made during the period. Also, the interest rate has declined. The average interest rate remained around 15% compared to the 22% last year. Also, there's a subordinate loan of around 2 billion, which the holding company has supported with the TPL Corp. Interest rate is not being charged on that. On the unrealized gain basis, front, we have recorded around 1.5 billion on the valuation gains in the subsidiary companies. TPL Properties and TPL Life and TPL Tracker being the primary supporters. In the upcoming results, you will have those shortly. You will have further significant improvements and gains in the upcoming results. These are the breakups of group revenue company-wise. On the consolidated basis, the revenue has increased by 1.575 billion. On the P&L, consolidated P&L, we have already discussed the group revenue. The cost has declined by 5.38 billion. Tracker being the primary contributor and TPL Insurance being the primary contributor to the decrease of this cost. On again, the finance cost being the primary contributor in reducing the loss, it has reduced by 815 million. TPL Corp being the primary contributor, primarily because of the repayments made during the period. Other income has declined by 1 billion. Actually, that was the surplus on merger that was recorded by TPL Insurance during last year. There was one-off gain, so that is not recorded during this year. That is the difference. So on total basis, the net loss has reduced by 1.75 billion compared to the same period last year. If you have any questions, I would request you to please ask.
I'm sharing.
So, if you don't have any questions, you may please conclude.
Okay, thank you. खत्म हो गया?
Yes, thank you so much. Thank
Okay,
you.
thank you. खुदा हाफिज.
Thank you. Bye-bye.
Thank you.